Thank you, everybody. Terrific afternoon. Started off with Ira, talking about really cool technology stuff. Then we went to Eastern, Central, and Southern Europe. I don't know that we ever resolved that, but it was great to talk about the region and learn more about what's going on there. And our final stop for the day is India. We did our first India panel last year, which was expertly led by AJAY PRASAD, my friend and colleague. Also, TAURUS Investments is a longtime supporter of the center and has been involved with us on a number of things. But again, thank you, AJAY, for being here and helping us with the panel. And with that, I will turn it over to you, and you can introduce our guests on the India panel for 2018. Thank you.
Thank you, Steve. Good afternoon, ladies and gentlemen. Welcome to the India panel. For, I think, want of anyone better, they've invited me again, given me a much more stellar panel than last year, which is saying quite a bit, but also taken away 15 minutes of time from the panel, so I don't know, it's a mixed message here. Without further ado, I would love to introduce my panel. And I'll start with Angshik here. Angshik is Global Managing Director for Cisco for Smart Cities. So it is a very exciting topic, not just in India, where India has been talking about having 100 new smart cities and so on. Next, we have Mike Holland. Mike Holland is CEO of Embassy Office Parks, which is one of the largest owners of top quality office buildings in India, and potentially, as I'm sure Mike's going to talk about, going to be the very first REIT to be floated in India. Next, we have ANKUR. ANKUR heads Brookfield in India, obviously one of the largest owners of real estate and alternative assets in the world, very strong international developer into India. And then last, but certainly not the least, we have Ramesh. Ramesh is CEO of India for JLL, and a man who has visibility and access to markets and asset classes and information across the market. So perhaps it makes sense to give him an opportunity to give us a very quick overview of India. And I stress very quick because India is, as I often like to tell a lot of people that I talk to, India is not a country, it's a continent which is disguised as a country. I mean, the numbers Ramesh would run through, but when you talk about putting North America, Europe, and a significant part of Africa together and still being one country, then there's a lot to talk about. Ramesh.
Thanks, Ajay. India is a $2.5 trillion economy, which makes us the 7th largest economy in the world. The government says by end of this year we would become the 5th largest economy, which means we would have overtaken UK and France by end of this year. We hope to become the 3rd largest economy by 2030. By that time, we would overtake Germany and Japan. It's expected that this 2.5 trillion would become a $10 trillion economy somewhere in between 2030 to 2035. We are growing at a pace of 7.2% per annum. That's our GDP growth rate. The government has done some good things over the last few years. Also, there are some challenges which we still face. I'll start off with the challenges. Close to 1 million people get into the employment workforce every month. So we need to find jobs for 12 million Indians every year. That's definitely a challenge. Global consumption has been weak, which has impacted Indian exports. Our stressed banking loans over the last few years is close to $150 billion. That's a small challenge. On the good side, the government has implemented the new goods and services tax, which brings about a lot of uniformity between tax regimes in 29 different states. The government is investing close to $250 billion on public investments, mainly into infrastructure. That's quite a good thing. In the last couple of years, we have seen financialization of savings happen. Previously, Indians, you would save just 30% in financial instruments. That's become close to 40% now. The Real Estate Regulatory Act was passed last year, which again helps the country become a very regulated market for buyers of real estate. Just some high-level facts on the real estate industry. The real estate industry is around $120 billion. Under construction is around $250 billion, $120 billion per year. That contributes to around 5 to 6% of the annual GDP of the country. The real estate sector is also the second highest employer in the country after agriculture, the real estate and construction sector. The audience may not know that more American companies lease space in India than Indian companies. American companies lease 40% of all space leased in India. Indian companies lease only 30% of that. The largest owner of office space today in India is an American private equity fund, Blackstone. Ankur will catch up with Blackstone very soon, the pace at which he is going. The largest owner of retail space in the country is Blackstone again. The largest owner of industrial space in the country is Canadian Pension Plan. In the last 13 years, since foreign direct investment was opened up in the country, we have seen close to $55 billion of investment, cross-border investment come in. Last year saw close to $6.5 billion out of the global cross-border of close to $450 billion. We have a lot of international sovereign and pension funds investing in India. GIC is very active, Abu Dhabi Investment Authority, Qatar Investment Corporation, APG, Dutch Pension Fund, APG, all extremely active in India. And out of that 50 odd billion dollars which have come from cross-border capital, close to half of that has gone into buying core office. So that's in a nutshell setting the context, Ajay.
That was quite the achievement, Ramesh, to put all of that information in such a close capsule. Mike, Ramesh spoke about a little bit of the policy changes and so on, but also something that we are seeing quite a lot in India is demographic and social changes. And as one of the largest owners of office space in India, you see a lot of young people working in your offices. But what sort of demographic and social changes are you seeing in India? You've been there now for close to 2 decades. And how do you think they are affecting the economy and specifically the real estate sector?
Yeah, sure. So Ramesh mentioned that the government have done some good things. I think that the government in the last 3-4 years have done many really great things, and India is in a position today that is more of a transformation than I've seen since '98 when I first went there. In India, there's 2 things that when I see international investors come in, I give 2 words. One is about scale and the other is about diversity. And Ajay alluded to this. You know, there is a tendency for outsiders to think about India as one homogeneous market. And that couldn't be further from the truth. People who know India understand not just at an urban-rural level, but even at a city-by-city level, you're talking about something that's very different. So on the map that's up on the screen, you know, I'd imagine there's 7 cities noted there. Each one is different, has different characteristics, so to have a blanket approach to India doesn't work. But just to talk about the people side of things, you know, our ecosystem, which is office park ecosystem, we have about 190 corporate occupier tenants within our portfolio, generally technology-related, engineering-related companies. And every year I look at and read when NASSCOM, which is the National Association of Software Services Companies, when they bring out their strategic review, I spend the weekend looking at that report. And this year it came out and it said there were 3.97 million people employed in that sector. A few days later, I went to another presentation where I discovered that there are 400 million employed, salaried people in India. So my ecosystem, and in fact the ecosystem that much of this panel is serving, represents that 4 million employed people. But the market is 100 times bigger than that. And that really kind of blew me away and made me realize how much potential the place has. Increasingly, we're seeing domestic occupiers we just did a build-to-suit of about 800,000 square feet for Flipkart. You've probably heard about Flipkart because Amazon is buying that company. Sorry, Walmart is buying that. It's the Indian equivalent of Amazon. We have a couple of 100,000 feet with a company called Ola, which is like the Indian Uber. So, those are just a couple of examples of the scale of our existing portfolio, but also the scale of the potential as the market grows. And I have to say that I feel more positive and optimistic about the levels of growth and where the country's going to, the changes that have been made over the last 4 or 5 years, than I have at any time over the last two decades that I've been in the country. It's a very positive and encouraging time.
That's a great note to start off the discussion. Angshik, something that always is tied to India is the conversation around technology and innovation. And it's as a young country, and it's been credited with leapfrogging in a lot of a lot of aspects. For example, access to broadband. Indians have gone straight from wired line telecom to 4G without going through all the iterations in between. But as sort of a technologist, how do you see the whole smart city, smart development aspect starting to impact the country as it is now and going forward?
That's an interesting question. So the points that Mike and Ramesh made were compelling. And I agree with them entirely, and those are facts. But I'll take the contrarian position. For us, India swings on both ends. There is jingoism on the one end, and there is despondency on the other. India has the highest number of open defecators in the world. India probably has 30% of solid waste which is not cleared. I don't know if you know this, but of a country that's got 1.3 million, with 1.3 billion people, the total number of toothbrushes in the country are approximately 600 million, but there are 1.4 billion cell phones in the country. So it's a country of absolute contrast.
We share toothbrushes, not phones, apparently.
Now, don't get me wrong at all. There is no premise of despondent commentary to come through. What I'm guarding against is overt jingoism, not measured against the tepidity that sometimes exists in these markets. But the following things are very positive. One is that probably and I'm just going to take some levity with my other panelists, I'm going to be part of this dodgy minority in India which is going to be above the age of 50 by 2030. The average age in the country is going to be 27. The general proclivity towards using technology to improve productivity in people's lives is going to be on a premium. Therefore, our assessment is that what the government is set to do on smart cities is timely, but these are preliminary steps. There is a lot more that needs to be done cogently and probably in a more structured way. To give you a contrast, we think that for urban renewal in India, there is approximately a need for about $1.2 trillion across the country. The current spending is somewhere between $50 and $80 billion if you were to aggregate multiple sources of funding. So the short answer is that it's a story in translation. There is huge opportunity. I concur entirely with Mike and with Ramesh. However, there are certain aspects that we ought to care for and manage them equitably as we go ahead.
Excellent. So, Ankur, Ramesh mentioned that doing the sums very quickly in my head, only about a percentage of global real estate investment annually has gone into India, even in good years, like 17 and 16. Given the sheer size of the opportunity and that it's probably the fastest growing large economy out there for the last 2 years, and from your sort of viewpoint, sitting in New York but also working in India and with one of the largest investors in the world, why do you think that is?
So I'll just put our business model in context before I answer your question. All of what Ramesh said about in a nutshell describing the opportunity in India it's all real. In fact, it's probably more than even that. Mike described the fact that only about 1% of population is even employed in these office parks that we all represent, which is a scale of opportunity. As it relates to a global investor like Brookfield, it's about capital allocation decisions, about where we invest our own capital and where we invest our clients' capital. 4 elements sort of guide our principles as to where we should invest. Firstly, growth, which people have talked about, the tremendous growth, jingoism or pessimism sort of aside, India is growing at real 7.5%, and those are facts. India has the youngest population in the world for any big economy, and that gap between the median age of India, which is 27, and developed markets, which is in the mid-30s, is going to stay for a very long time. It has 15% of world population and probably 30% of the world youth. So these are all real facts. Now how does a firm like Brookfield think about putting its resources to work? And as I said, four principles. Growth has to be there, which is certain. Established rule of law is an important part. Respect for capital, and that comes through cycles of demonstrating that we respect global capital, which many countries have failed in the past. And lastly, having deep presence in the market. I frequently give the example of how Unilever has built its business in India compared to many others who went into India, touched the waters and then went away. Unilever has been in India for the last 4 decades, probably more than that. And today, India's business in Unilever is probably 30 or 40% of their global business. So India is a multi-decade story for all of us. Brookfield has been in India for 10 years. Only in the last 2 years has Ramesh returned my call since we started investing capital. Sorry, so it is about building a business. It is about building a multi-decade business for us. And I think the percentage, 1% or 2% being AUM invested in India, those are numbers which can very rapidly change for all global investors. Office business in India today is probably one of the best Indian office market is one of the best office markets in the world right now. And we can talk about those merits. Mike is running one of the largest businesses in the country, but net effective rent today in India for most of our office buildings on a dollar basis are higher than, you leave aside the top 4 markets in the US, net effective rents in India are higher today than most of the markets in the US. Now, that being said, only if 10% of people who are graduating take up an office job, the Indian real estate market today has to double in size. Right. So Ramesh, it's about 500 million square feet today, institutional quality real estate. Right. And as the country is generating 1 million employable youth every year, so in the next decade, you'll have to double the office space, institutional class office space, just to employ these people. So the opportunity set is huge. India is competing with global capital. India is gonna have to get its act together if on these 4 parameters, and I'm sure other investors have other parameters to think about places to invest their capital, India has to make true on its promises.
Perfect. So that's a good segue to get into the next sort of segment. And I would start with office, as you just mentioned, and by asking Mike, as you just designated him, as and by way of introduction to the audience, Mike's platform, Embassy Office Parks, is a joint venture between Blackstone and India's largest owner, developer, operator of office space, Embassy Group. And so I wanted to ask Mike, the office business has seen the lion's share of investment over the last 2 years, and I believe, and partly from Ramesh's organization statistics, that the Indian office market in terms of leased space every year has been leading the world in square footage in the last 2 years. So what sorts of developments are you seeing in the sector? Obviously, I know you would want to talk about REITs and perhaps co-working, 2 things that Mike is at the center of. But what else, and amongst all the exciting developments in the office sector, what do you think is worth looking at, and what do you think will drive the future?
Yeah. So just to pick up on the point I made about scale and also on some of the previous comments, a fun stat is that over the last 4 and 5 years period, Bangalore has leased up more space than Shanghai and Tokyo combined. Again, this point of, I think our rentals are relatively low, and I would say that, of course, but compared to the rest of Asia Pac, but the scale is undoubted. But what we're seeing in our market, and I think Brookfield would have a similar approach to some of their properties, is we're in the business of providing what I call large-scale urban business parks that provide a complete business ecosystem. So the challenges of urban infrastructure in India are well known. So what corporates are looking to do is to find environments that are safe, secure, that can provide the required infrastructure for their staff. We're doing things like putting hotels on every business park that we can do that. Some of the great things that are changing in India would be examples. We're putting creches on each one of our business parks, not because we're required to comply with a new act called the Maternity Act. We were already doing that, but that's another example of change that's happening within India. There's a new act called the People with Disability Act, which is enforcing compliance. And I think sometimes in India, the rules have always been there in the past, or often been there in the past. And what we're really seeing now is a change whereby at every level, responsible developer, investor owners, corporates, and engaged and empowered workforces want to see that sort of compliance. So our total business ecosystem is what we're really trying to provide. And frankly, that leaves small standalone buildings in a difficult position, because unless you've got serious scale, you can't do what we would be doing and maybe half a dozen other major office owners and providers. You can't do as we have funds to position a metro at the front of your business park and actually write a check for double-digit millions of dollars, or to put a flyover in and so on and so forth. That's very new, but we're getting involved in an informal public-private partnership where we're having to do all of those things together. So if I was the owner of small standalone office buildings, I'd be concerned, because the sort of corporates that often a JLL will be representing and so on, or Cisco is in a campus next door to one of ours. They really want to be in that type of park. So it's a sea change. We're also, you mentioned co-working space. Embassy has a joint venture with WeWork on a pan-India basis. So we see the flexibility and the changing demographic and type of office user. So we have that entity as part of Embassy. It's run as a separate vertical, but we're aiming to put a WeWork on each one of our business parks. So our typical business park might be anything between, typically it would be at least 5 million square feet. Our largest business park is about 12 million square feet. So it's really, we do transport solutions where we team up with the city, with bus transportation. I mentioned the metro. It's having to provide that total package so that the corporates really can, so to speak, say goodbye to the urban challenges, and then at least while they're in the park and their employees are there, they can have a good, positive and productive experience. So that's our overall philosophy.
Excellent. Ankur, I think in a past conversation you've mentioned that amongst the different ways of working in India, I think what Blackstone has chosen, what you've chosen, are not at odds with each other, but sort of divergent, in the sense that Blackstone's set up multiple partnerships with different operators, including obviously Embassy, which is their flagship partner. But Brookfield's strive to strike out on their own. You've taken a significant amount of time to strike the first deal, but it was a large deal, and then you've persisted in building up the business yourself. So, how do you see that contrast having evolved? And with the benefit of hindsight, would you still do it again?
So I'll answer the second or the last part of your question first, which is, in hindsight, I would absolutely probably do it again, because I believe that was the right template for us as we thought about entering India. And again, Brookfield identified India 10 years ago as a market which we wanted to invest in. And for the first 5 years, we learned what not to do. And then the last 5 years, those learnings have been put into action. But contrary to what the market believes, that Brookfield and Blackstone are in a way differently minded, I think we are very much similar in our approach to providing real estate solutions or investing capital into real estate solutions in the world. So Mike talked about the urban ecosystem that the Embassy joint venture between Blackstone and Embassy is doing. And across the 7 odd large business parks that we have, we are aiming to do the same thing. While Blackstone found like-minded partners, we decided to hire a team of about 130 people, which has all these services in-house, led by operating individuals, leasing guys, development guys, accounting. So we've created an Indian version of a developer that's owned by Brookfield, which is providing exactly what a local developer partner would provide to Brookfield's capital. And that goes to the DNA of firms. Brookfield was always an owner, operator, manager of assets. In the last 20 years, it's become more of a owner, manager, also an investor of our capital and our investors' capital. So I think that the operating philosophy remains the same, which is to provide high quality ecosystem. In India, it's not just enough to provide a good quality office building. You have to maintain roads. You have to sometimes build public roads outside of your park, as we've had to do. Provide simple things like taking care of sewage plants, because the urban ecosystem has not caught up with the pace in which cities have grown. And our endeavor is to keep providing for that. Otherwise, it's very difficult for us to be able to target and make ourselves relevant to, as Ramesh said, 40 to 50% of demand is coming from the US clients, and they demand a certain amount, and not that the Flipkarts of the world are less demanding. So across the board, I think tenants are very well traveled, they have global businesses, and they want the same level of real estate operations as they do in any developed market.
Excellent. I think both Mike and Ankur have touched upon the inadequacies of urban infrastructure in India, which obviously both of you are trying to resolve in your own ways by working with the respective governments. Angshik, where do you think technology can help sort of, if not clean up the mess, which is on an epic scale, but sort of enable more efficient, faster solutions?
At a gestalt level, if you were to break down technology spend, for every $100 that a developer today spends on a property, he's probably spending less than $3 on technology, approximately, give or take. It could vary contingent on what kind of a dwelling it is and what the operating phase is. It's our assertion that if you can take that from $3 to $5, there is likely to be incremental gains which are significant in nature upfront, and then over time it will kind of normalize in the overt application of those gains. Take for instance, let's not dwell on privacy for a minute, because that's a hot topic being debated in India, and Ankur and I were speaking about it earlier. Take Aadhaar for instance, which is probably the largest biometric effort in the world today. If you were to look at it technologically and look at the advancements that program offers, the benefits far outrank some of the other, I think, very cogent arguments which are being laid out. That's a good example of usage of technology. However, India suffers from what we call, in our parlance, information overdose but data glut, wherein there is so much of information available, but for us to synthesize that information platformically and make it available in bite-sized consumable chunks and have a business model created on optimizing those data models sufficiently is probably not high up in its maturity curve right yet. So we are now seeing the primary narratives of Wi-Fi being offered in multiple cities, not by a service provider, but by the city themselves. Take Indian Railways, for example, will now provide free access to the internet as you get into any of the 9,000 railway stations upfront, which is a significant gain from where it was. So these are some examples where we are doing very well. Where are we doing poorly? So for about 800 million of us in India, healthcare is non-existent. Healthcare is largely privatized. 500 million people in India will gain access to healthcare. For 800 million, there is poor or very poor healthcare. Another area where technology can significantly improve India is education. The last ASR research tells us that an average 8th grade student in India cannot multiply a 3-digit number with a 3-digit number, and sometimes a 3-digit number with a 2-digit number. And these are certain areas that technology can play a significant role in and improve the social indices in a largish manner. The fallout of which is that provides the cogent base for employability, which in turn provides fodder for rental spaces and allows for overdevelopment of the society.
Excellent. I was desperately trying to multiply a number to see if I am better than the average, which apparently not.
Right.
But thank you, Angshik. And it's quite interesting that that India talks about technology so much, and we are so good at technology worldwide. Our folks are all over the world. We're sending stuff to sending frugally designed and launched spacecraft to Mars. But some of the smaller, easy to fix things are still left unfixed. So that's
easy. So I want to make the point that it's not easy. So there is an assertion that it's very easy. I think you mentioned it. It's like as if you were to put Latin America, Northern America, and Europe together, look at diversities, look at barriers that come through. So I think if you were to use the broad base and say it's easy, it's, I think being a little simple.
correct.
I'll just add to what he said. It's not easy, and people have to understand when this forum is about World Economic Center for Real Estate and Investments. India is a unique experiment in the world. Where democracy came before capitalism.
Correct.
And it's a very, very important point to consider, because everybody has right to defending his privacy, and people understand that very well, whether they can multiply a 3-digit number by a 2-digit or not. And that's a function of how India has evolved. India was democracy 7 decades ago when it attained freedom, but not a capitalist country. It was a socialist democracy. And those experiments, by and large, had failed across the world. But in India, it succeeded. And two, India went from being an agro economy to a services economy. So the 400 million, employed individuals, but everybody's talking about the 4 million that are working in office parks that we represent. So it's not a simple problem, because this has never been tackled before. No economy of the scale that India exists today has ever skipped the manufacturing, middle step, which I think will probably be good for India in the long term. But in the short term, there are real issues to deal with.
Agreed. So Ramesh, if I asked you to whip out your famous clocks of where the industry stands and what are the cycles that we are talking about, India's been on a strong upsurge for a long time. I think since 2014, it's been up and not up and away, but up and up. So where do you think that, and again, it also comes back to the question of diversity, because the 4 quarters of India are 4 large countries in themselves and very diverse. So if you very quickly try to run across different asset classes where they stand, and also geographically looking at India, where the different markets are in terms of their stages of development, how would your commentary be?
So the market is extremely fragmented, scattered. We have close to 10,000 real estate developers in the country, and without too much of depth. So we analyzed out of these 10,000 people, how many of them actually have depth. And the definition we gave for depth was the last 15 years, we broke it into parts of 5 years each. And they should have delivered one project in each one of those 5 years. So out of 10,000, we figured out that only 250 developers had delivered on residential, 40 developers on office, 5 developers on retail, 0 on industrial. So the market still, which is an opportunity for this audience and for developed countries to come and invest in. We sell a lot of large assets in the country. If you're selling a $150 million plus asset, which is like more than 1,000 crore plus asset for office, you could find around 8 to 9 buyers. For retail, you would find around 6 to 7 buyers. Industrial, around 4 buyers. And hotels, you would find maybe 2 buyers. So again, depth missing at this point of time. Breaking into various asset classes from a cap rate point of view. Today, India's cap rate for office stands at around 7.75%. Retail at around 8% and industrial at around 8.25. Residential obviously is just around 2% from an office stock point of view, Ankur spoke about how we have a total stock of just 500 million square feet. Tokyo, one city, is 1 billion square feet. All of India, including these 7 cities, is just 500 million square feet. Vacancy levels in all the 7 cities for grade A is in single digits. Except 1 or 2 of them, it's in single digits. Annual office demand, probably the highest in the world at 30 million square feet. Office demand and supply more or less keeping in pace with each other. On the retail front, although we have 700 malls in the country, just around 90 malls of them is grade A. Grade A vacancy rates across the country for retail malls is less than 5%. Like I said earlier, Blackstone, which didn't own a single mall 2 years back, has already become the largest owner of malls in the country because they've been kind of buying malls all over. Industrial is a very big asset class. We have seen significant amount of interest. US has 12 billion square feet of industrial space. India has a total of just 140 million square feet of industrial space. So, which is, and we have 17% of the world population in our country. So, huge amount of opportunity. Annual demand we estimate to be around 25 million square feet, at least 25. Today we don't have enough supply, but with the right supply coming, we need at least 25 million square feet. In terms of developer lending, the overall book size of all the banks and financial institutions put together is still limited, just around $65 billion. That's growing at a CAGR of around 16 to 18% every year. So there is a big opportunity for lending. A lot of global funds today have come to India and have various debt strategies and doing reasonably well over the last few years. On the hotel side, we went through a major oversupply situation over the last few years. We have 250,000 rooms in the country. We had just 125,000 rooms till 2007. The balance 125 came after that, which is had an overall impact on occupancy, which also shows that there are not too many buyers to buy active hotel rooms in the country. So overall, the sector looks extremely positive from the demand side. All asset classes we are seeing drop in vacancy. Not much of concrete being poured. An important statistic is back in 2012, 75% was residential and balance 25% of the construction was all other asset classes. Today that's become 85% residential and just 25%, 15% other asset classes, which has led to an oversupply of residential in the country and an undersupply of commercial across the country. There's one sector which is highly untapped in India, which is the affordable housing segment. Recently, CLSA put the demand for affordable housing in the country at 10 million units per annum. That's 10 million units per annum demand. Most developers in India produce homes which are more than $100,000, and only 1.5% of the total Indian population of 1.2 billion people can actually afford those $100,000 plus homes. So a huge amount of opportunity in the affordable housing sector across the country. The government has made a big promise of housing for all by 2022. Even if the government does 25% of that, I think it'll be a big achievement.
Perfect. Thank you, Ramesh. So the next round of discussion that we want to have is focused on the innovation that we see in the country and sort of where the future is headed. So again, I'm going to bring up Angshik and ask you if Cisco had a free hand in, let's say, doing an exemplar project anywhere, pick a city or create one from scratch, how would you go about it?
So we actually look for, it's a good question. We look for 5 things if we were to do an exemplar project. So the first thing that we are looking for is visionary leadership. We are a democracy. India has shown the world how to democratize the underserved, but there is still need for significant political coverage, especially in large public spaces. The second thing that we look for is an ecosystem of companies or entities that are willing to support that narrative of that vision. So Bangalore or the 7 cities listed here will very often mushroom a multiplicity of companies that support the vision of innovation and we look for that ecosystem. The third that we look for is a significant preponderance towards private partnerships or private capital as opposed to government capital. If it's government-led, we are hesitant sometimes. Don't read it wrong, but we just think that the pace of work can be a little more aggressive in certain instances. Fourthly, we are importantly, I'd allude to Ankur's point, looking at the rule of law, wherein we can cover our IP, we can cover patents, we can look at monetization models, we can look for greater success. And lastly, we are looking for a market sizing opportunity which is compelling but profitable in about 18 to 24 months. If these 5 broad indicators are satisfied, then it probably is on our runway to consider innovation more aggressively. However, for every 100 innovative suggestions that come, we probably monetize between 4 and 6 as the market opportunity develops. Anything in India is probably divided into 4 segments. One is a 15 million populace addressed market. The second is a 300 million populace addressed market, and then the larger populace. And we'd hear this commonly called term called middle class. So euphemistically, there's nothing middle about the middle class in India, right? So we have to make sure that we understand that narrative better and position the solutions as accurately as we can.
Excellent. So, Ankur, when we are talking about, you spoke about how Brookfield's been looking at depth in terms internally and setting up its own team, building up its competence and so far and so on. Now that you have a platform, if you look at something very different, something out of the box to invest into, maybe something very innovative, and as a worldwide owner of alternative asset classes, what would it be in India?
So more office. That's probably going to be my answer. But look, I mean, as you rightly look, think about India in the context of India first, which is a Bollywood blockbuster that does $15 million in revenue is considered a super hit. Now, in a country of 1.4 billion people, that should not be the definition by which we define success in any parameter. So the depth of any sector needs to be there for us or for any large global investor to spend the time and effort. And people talk about 2006, 7, 8 vintage, and people who invested capital during that time came back with the story. India stands for "I will never do it again." So we are very careful in not getting into that mindset where just because a sector looks sexy, it doesn't really mean much, because it has to have depth. So Ramesh talked about affordable housing. He talked about hospitality. Now real estate houses the economy. All of us can spend a lot of hours debating. If the economy is not growing, real estate will not have very strong long-term fundamentals. So at Brookfield, we like the story that's building up in hospitality business right now. India had a period of massive oversupply in the hotel rooms. It wasn't uncalled for. India needed that many hotel rooms, but India lacked the owners and the operators to manage through that revenue cycle. And what it led to was undercapitalized, short duration debt capitalized hotel owners who dropped ADRs beyond sustainable limits. You could find 2004 and 5 to find a luxury 5-star hotel room would mean making your bookings several weeks in advance, and the hotels could cost you anywhere between $350 to $400 a night. In 2010-11, a Four Seasons Bombay would come to you at $100 a night. So the economics of all these projects went haywire. I think market is now at a more sort of a stabilized format. Hotel market needs more hotel rooms. It needs hotel rooms in the right zip codes. So we are looking at hospitality as a segment that we'd like to think of studying it further, establishing a platform, etc. Affordable housing is a sector that it always intrigues a lot of us. Very cognizant of what we can deliver to a market. I don't think being able to acquire vast tracts of land to build these homes is going to ever be a competitive advantage for Brookfield in a place like India. But around our office parks, if we can densify and do some residential for rent, that's something which will be interesting for us. Just Mike talked about creating this urban ecosystem. We have 7 large office parks in the country. In 5 of those parks, about 40,000 people are employed or will be employed once they are fully up and running. So a lot of density of people who are living. These are office parks which are run 24/7. And the factor that real estate is put to use is a factor of 2.7 times when an office park is run 24/7 versus 12/5. So these are living, breathing infrastructure assets. We call them real estate because it's sexy, but these are real infrastructure assets for the country. And I think densifying residential around these could be an interesting segment for us.
Excellent. So Ramesh, I'll switch to you and go a little bit off tangent from core real estate, but we know that JLL has a real estate technology fund in India, and there's a lot of emphasis on investing in startup firms that invest that are dealing with technology in real estate. How do you see that as a exciting new thing that JLL is doing, and how do you see the whole Proptech or real estate technology sector in India developing?
So we have a very small fund investing in Proptechs. We made around half a dozen investments so far. We invest between $200,000 to $300,000 and try and see how we can accelerate some of these companies by providing JLL's platform. But the ecosystem of Proptech is quite active in the country, and in the last 5 odd years, we've seen close to $1 billion being invested in Proptech in India compared to $3 billion in China. The other good thing about India is we track this space very closely. Close to 170 Proptech startups in Asia, of which around 80 are in India. So the sector is quite vibrant. But still there are a lot of challenges when it comes to Proptech in the country. Most developers till now, at least were used to big margins. They didn't feel the need of using technology. Most developers are small family-run organizations. Most developments are sold strata, so you don't need to worry about a long term. And real estate in India is very labor intensive, and labor is very cheaply available, because of which technology was not being used. But that was the story so far. Going forward, developers are under huge margin pressures. Labor costs have gone up, material costs have gone up. So people are driving in efficiency by using technology. The entry of big global capital, people like Blackstone, Brookfield today driving in those efficiency and technology. So people want to have the best of global technology within real estate. The large corporates, like I mentioned, 40% of space taken is American companies. These companies are insisting the best of technology within the building. So many of these new sectors like co-working, data centers, all these are again driving technology in the space. So going forward, we're very bullish on Proptech as a sector within the Indian real estate market.
Excellent. Mike, I think what Ramesh just finished off by saying is what I will start your next question on. And that is, within the office sector, how do you see trends like digital enablement of sort of the buildings themselves, kind of focusing away from just the bricks and mortar, but looking at the user experience within the buildings for your employees, for your tenants, and even things like co-working as part of that whole mix? How do you see that evolving in the next, let's say, 3 to 5 years?
Yeah, well, that's a big question. I mean, I think a really important part of that user experience, the employee who sits in our park, so there might be 200,000 or so of those people. That's really important to us. Why? because the corporate occupier, if they are asked the question about why are they in that city, why are they in India, it will almost always be about human capital. So the whole standard process about attracting, retaining people, making that business park, that environment, something that works both for the business in a practical and productive way, of course works for the investor, but works for those employees in the park. So we do that in a number of soft ways, but in terms of technology, we've worked on the adoption of simple things in our park using technology. We're trying to reduce our impact in terms of traffic and transport we've partnered with a couple of local companies who have apps for car sharing, shared ride experiences. We worked with both Flipkart and Amazon to bring in the concept of drop boxes, which I think are fairly common nowadays, but a couple of years ago, that was something we saw we had a problem with security, with dozens, if not hundreds of deliveries coming into our parks every day. And actually it was somebody from Hong Kong pinged me with this idea as a solution. So we tied up with both Amazon and Flipkart and rolled that out across our parks. In terms of kind of smart technology, Cisco style technology, I think it is a challenge because of the capital expenditure issue. Not just in relation to a Cisco, but a Schneider or the BMS type of systems. So a lot of that gets pushed by our occupiers. If our occupiers are prepared to pay all or part of that with us, then we'll go down that technology route. I mean, I think in some ways there's this. India's come and our commercial office space has come a huge distance in 10 years, absolutely massive. There is a better propensity to pay. People do want a higher spec. People want older. Some of our buildings from the early 2000s are now coming up for release. We strip them back. We bring them up to today's standards. That would include technology and BMS type of systems. So it's moving forward, but also lease structures don't help in the way that they would certainly in Europe. Those longer term leases that allow you to finance those sorts of things. So we're moving in that direction, but I wouldn't say that's at the top of the list.
Understood. So I think we are coming to the end of the discussion. So probably, to sort of a wrap up, I'll probably pose a question to each of you, and then if one of the others would want to contribute, that's perfectly fine. But Ankur, as you see India as a market for global institutional capital, where do you think in the next 5 years it's headed? Do you think the same growth trajectory continues? You alluded to the fact that the volumes could change overnight, but from your perspective and from your informed view within Brookfield, where do you think it is going?
It's always a little bit tough to predict India on a 5-year window. I mean, I would say in the next decade or so.
I'll take 4.
Okay, well, then you tell me what happens in the next elections.
That's true.
But look, as I said right in the beginning, India is a multi-decade story. So, it will evolve. 15-20% of human capital in the world has never had a period of time where it's not evolved and gone better. So the human resources, the human capital in India are its real strength, and they will figure a way out. I think for capital markets, India is probably a very, very engaging capital market, but not a very deep capital market. IPOs get oversubscribed 20 times, and I think all of that needs to translate to real estate. Hopefully, Mike does India's first REIT at some point. I think REITs will be REITs were an important asset class which institutionalized real estate in the U.S. back in the early 90s, late 80s, and through the last two decades. That also encourages private capital or global institutional capital to be able to invest in the country. Creates a liquidity mechanism for local users and owners of real estate. I think REITs will be an important phenomena. I think as India demonstrates its respect for capital, which it has successfully done compared to many other economies which have had blemishes in its track record of not I think a lot of things which had happened in 2012, the Vodafone tax issue and few of these which made headlines. I think India has been successfully able to navigate those and convince the global investor that it is a market that they should invest in. So I think if that continues, I don't see a reason why a significant amount of global capital should commit to India through either public strategies, through REITs, or through private capital, through funds like ours or others.
Thank you, Ankur. Ramesh, if we were to pick out one important trend in the Indian real estate industry that you see playing out over the next few years, what would that be? One trend.
I would say transparency. We used to be the 52nd most transparent market around 6 years back globally. To 2016, we were ranked 36. Our new rankings on transparency would be coming in the next few weeks, and we expect India to be in the late 20s. So, and that's a lot of credit for that should go to multiple players in the market, whether it's the government, large investors, big developers. All of them have played a role in making the market more transparent. Can be better, but that's something. But if I have to pick up one more trend, I think it's an emergence of a lot of new asset classes in the country. Co-working is something we hadn't heard this term 2 to 3 years back. Last year, 5% of office take-up came from co-working. Data centers was not talked about 2 years back. Today, there are around 12 players looking at data centers. Student housing didn't exist as a concept a year back. That's come in a big way. Industrial, there was just one player till last year. That's come up in a big way. Today, retail mall owners are talking about how can we create more malls, which is event and experience based. That's again happening. So all these new asset classes will change, office buildings, smart buildings with IoT coming up. So I would say these are some of the big trends which are in line with what we are seeing in more developed markets, but definitely happening in India.
Thank you, Ramesh. Angshik, I know there are a lot of challenges out there in terms of urban redevelopment and governance and so on, but is there any learning that we can take from the Indian experience and translate it overseas?
What Ankur said, India actually shows how to, or India has proven that how can the illiterate democratize itself. The ability to understand and be self-aware of its rights. Look at it this way, I mean, regardless of poverty levels, savings rates are continually going up. It's now breached the 40% mark, I think. And chances are for the euphemistically called middle class, they're probably spending $8 of every 10 that they earn. And therefore, capital accretion into individual homes will increase. That allows for more disposable cash. It's a very esoteric concept, but I think this probably is something worth investigating.
Absolutely. So, Mike, you've spoken about how a lot of effort has to be taken by developers like Embassy and Brookfield into cleaning up the mess outside your parks, for example, or densifying. But do you see trends like transit-oriented development, or do you see trends like vertical growth? Do you see them becoming reality in India, or is the structure of the market such that we will keep on plodding aimlessly?
Yeah, I have to say, I think some of the tone is much more negative than it should be. If you fly into Bangalore Airport or Bombay Airport or Delhi Airport, they are as good an airport as you'll find in Asia. Yes, you fly to Trivandrum or to Chennai, which are government-run Airports Authority of India, then you see a big difference. If you travel on the Delhi Metro, you'll have as good an experience as you'll have in many Asian cities. And we would like to see the Bangalore Metro moving faster. That's why we've signed up, along with another large developer, and actually a corporate, Intel, have signed the same agreement as us. They have a campus and they want a station outside. And the government is being proactive and supportive. It's not easy, but you know, it's a 1.3 billion people market that's growing at 7+%, depending on whose numbers you look at. So yeah, transit oriented for sure. That's why we want a metro outside our front door, and we pay for it. It's changing rapidly. There's, you know, I see it as a very positive time, positive trajectory, bringing, you know, what 20 years ago people would have said was really a third world country, and today that term has been disposed of. The middle class is solid, growing, positive. Government's doing a positive job at the centre. You know, I see it as I'd like to see more of the same over the next 5 years as we've seen over the last few years.
Excellent. So I think that brings us to the last segment, which is just a little bit of Q&A, and since we are running a little behind time in quintessentially Indian fashion, we'll probably keep it to about 5 minutes. So I've received a number of questions here, and some of them have already been answered by the panelists in the course of the discussion. So I'll try and pick 2 or 3 which have not been answered. One which I found particularly interesting is from Atif, and he asks that, you know, we talk about India being young and large population and so on, but India's neighbors, which were part of Greater India, whatever you want to call it, but 8 decades back, namely, you know, Sri Lanka, Pakistan, Bangladesh, these are also very vibrant young countries with a lot of potential. So if, you know, global capital, and I'll probably address this to Ankur, if global capital is looking at India, why is it not looking at these other countries? And what, if anything, could make you or other investors change your view on those?
I mean, it's a great question. We are frequently asked this question. You know, why aren't we investing in Eastern Europe or Indonesia and Malaysia, and which are great economies to be? I mean, they are growing economies. You know, I come back to the same question. You know, 15 years ago, we were a large investor in North America, Canada, and Western Europe. Of course, we have our roots in Brazil as well. And today, we are a large investor in, you know, India, China, large parts of continental Europe and Australia. So I think it's evolution of the firm. But more importantly, you know, again, goes back to the guiding principles. Do these economies have a demonstrated track record of rule of law and respect for capital? And lastly, is the market deep enough for us to be able to compete and actually invest the time and effort to investigate an opportunity? And I think that's really the driving principle. We don't have a single investment in Japan as a firm, so I would probably assume that, you know, that part of the world comes first before the other parts.
Understood. Ramesh, this is a direct question to you for JLL. Does JLL have a similar fund to invest in Proptech anywhere else in the world? And do you, and you clearly said that there is a large market out there. Do you see that as a growing part of JLL's business in India?
Our global CEO went on record to say that in 5 years' time, we will be a digital tech company, not a real estate services firm. We're making huge amount of investments on the tech space across the world. Recently started a new initiative out of Silicon Valley called JLL Spark, wherein we hired a couple of Groupon founders who are also early stage investors in Uber to head that business up for us. Today, a lot of our global investing in technology is centralized in a Silicon Valley office. And we believe we are making all the right starting points. We have ex-Twitter global executive on our board now. He used to head Google in India. We are hiring tech professionals across the world. So the journey is a start, and the next 4 to 5 years, we'll know how we fare on that.
This seems to be a theme across the world. I recently spoke to the CIO of one of the largest, the largest car maker in the world right now, and he said that he wants to make it a tech company that also happens to make cars. So I don't know if it's a cool thing to say, but it looks like everything is converging. Angshik, one quick question. You mentioned that one of the things that you look for is the availability of private capital. Does that mean that you have given up on public-private partnerships?
No, actually, we first look at innovation spurring private capital. So if there is no innovation ecosystem, but oodles of capital is of no interest to me.
Okay.
Our balance sheet itself will prefer up that kind of capital on ourselves. By Cisco on its own has enough reserves. But it's the larger ecosystem of a multiplicity of innovative companies willing to share the risk and go with Cisco and walk the mile. That is interesting. So that's the drift.
Understood. And Mike, I'll end this with you. So one of the questions, and it's from Anonymous, so I don't know, is that, in the last round, and you were there in 2006, 2005, 2008, a lot of foreign capital invested in India, and I think Ankur had an acronym that I didn't quite catch for India.
I'll never do it again.
Okay. So if there is one thing, and we've spoken about transparency and so on, but if there is one other thing that is different this time, which makes you far more optimistic that this cycle is here to stay and it's going to continue for a long time, what would it be?
I think back in 2006, I don't know if it was the same all over the world, but people put an awful lot of money behind individuals or entities that they really had no clue about. I don't know if that happened outside India, but I know for sure that was clear what was going on even before those investments. It was interestingly, there's a number of domestic funds who made good money through that period. I could name a couple of those, but so domestic money, smart domestic money. Not universally, but many funds were okay. The big difference today is, I'd say, everybody knows everybody. So one can come to a marketplace in India and everybody's either made or lost a reputation. So you kind of know what you're dealing with. And I think, going back to one of the points earlier on, I really admire Brookfield for managing to navigate through the market without a domestic partner. I think it's a really tough operating environment, but I would always say your number one decision is around who's your partner, whether that be a capital partner or an operating partner. So what's different now is everybody knows the reputation of the people that we're dealing with.
Understood, and that makes a lot of sense indeed. I know that Steve is about to jump on stage and yank me off, but I think I'll take just a minute to sort of conclude and wrap up the conversation. So I think beyond the very obvious aspects of diversity and scale, I think what we see in India today is a rapidly maturing market, be it in terms of the fact that probably pretty much everybody out of the top 15 in terms of global institutional investors are in India. And that the very maturity of the capital, but also of service providers, let's say like JLL and Cisco, their influence in the market has helped the market mature. There is a lot of optimism about the sheer potential of the market, whether it's in office or any other asset class, but it always has to be tempered by the fact that the age-old adages about, knowing your partner and trying to control your destiny in a certain sense, which is very important in India because things can be a little chaotic, are there. But I think optimism is also sort of kind of ribboned by the fact that it's a very young, fast to adopt market, which in itself creates some challenges because things evolve so fast that by the time you finish building something, it might be obsolete. So it might be better being a technology company because you can hit Control Alt Delete a lot faster than you can blow up a building. So all in all, I think from last year, we have seen a lot more of the evolution of the market, and hopefully next year, if Steve still keeps us on as a topic, I think there will be a lot more good things to talk about. Thank you, gentlemen.
Thank you.
Thank you for being part of the panel.
AJAY panel, thank you very much. Terrific discussion. We end the day in India. Thank you very much. And we'll look forward to seeing everybody outside at the reception. The bar is open. And then also tomorrow morning for the Edge sessions. Breakfast is at 8. Edge sessions begin at 9 o'clock. Lots of great stuff there too. So thanks, everybody.